Good morning, everybody. Thanks for checking out this quick video. We want to give you a really quick overview of this opportunity. We're very excited to share this deal. My name is Mike Angelo. I am the managing partner of NK Development Group, and our partners and I are, again, really excited to talk about this opportunity. The 60-unit apartment complex is called Majestic Pointe Apartments. You can see here's a beautiful view of the Oregon Mountains here. This is in Las Cruces, New Mexico, and maybe some of you don't even know where Las Cruces is, but it's about 3 hours south of Albuquerque. It's the home of New Mexico State University, and we're going to take a quick dive and get through these. As we go through this particular video, again, you have the slide deck in front of you. This is just to kind of tell the story, a little bit about the background of the deal and how we came about getting it and the ins and outs and the reason we're really excited. So if you have questions, please reach out to us. We will have a live webinar on February 24th, 6 p.m. Mountain Standard Time. You should have a link there to register for the webinar, so please go ahead and do that. But again, hopefully this will prepare you for some questions that you might have and a little bit more about the deal. So as you can see here in front of us, it's a $4.1 million purchase price, 60 units, built in 1982, sits on top of a hill at the top of Majestic Ridge Road, and 3 different buildings, 3 stories. We are looking to finance about 75% of it, and our entry cap right now is between 5.75 5.8 based on current operations. Our equity raise on this particular deal is 1.839 million, and I'll show you the breakdown of what that looks like. A little bit about the structure and kind of what's going on with it today. Pretty well maintained property. The current owner is looking to retire, and so it's been actually a deal that we've had kind of locked up for several months now. We actually got the original LOI accepted back in August, and we pushed pause on it. We had a couple of things that we're working on, and so they came back online, and so it's really an off-market opportunity at this point. They did market it originally, and then since we kind of got out of the contract, they really stopped marketing it to others. So we got our hands around it. We actually toured the property already, and we'll be going out there next week actually to do our full due diligence. And we'll share some updates, and you guys will have the link to the portal to have videos and additional pictures of all the units that we'll walk. And again, we're really excited to have you partner with us on this opportunity. So let's keep going. But you can see here, wood structured buildings, stucco exterior, shingled roofs. Roofs were replaced back in 2016. So that's a really good thing for us, as we should have another 10, 15 years of life, at least during our holding period. We're not going to have to deal with the roofs unless something significant happens. All the evaporative coolers they're pretty much brand new. And the complex has a mix of 1, 2, and 3 bedrooms, large units. I'll show you guys a little bit more about that. From an opportunity standpoint, we feel like we have some opportunity to collect additional income from utilities. So currently the tenants pay gas and electricity, which is a very good positive thing, but water, sewer, and trash are something that's still incurred by the ownership. And so we're going to put together a utility reimbursement program that will help us collect some of that at a flat rate. A little bit about the highlights of the investment. So we're looking at a $50,000 minimum investment. Average annual returns over the holding period is about 18%. Cash on cash, or the cash flow that the property will produce, will come out on an annual basis of 9.65. That'll trend up, and including the sale, it will be a total of 18.4. If you track IRR, it's 13.75, and that means about an equity multiple of 2.8x. Again, I'll show you some more details. Quick background on the leadership team on this particular project. Eric Stewart has a tremendous amount of experience in multifamily. He's been in the business for over 25 years, and is helping us in this particular project with the debt structuring, the entity structure, and really overall general guidance. He's got about 1,180 units under management himself with his other partners. So we're excited to have Eric on the team. Myself, for those of you that don't know me, 20 years in the executive management leadership role in the construction supply world. And I also have some ownership interest in some multifamily deals spread across the West and central US. Michael WAGMAN, Brent comes to us from Florida. His background includes working with startups, and he's done some fix and flips in the single family space, and he has a portfolio of 4plexes in the Florida market. He's gonna be helping us with capital raising efforts and investor relations. Quick overview on the property itself. Here's kind of a couple of aerial shots. Like I said, 3 buildings, well maintained. This little pool area we're going to fix up here, but you get great views of the city of Las Cruces, and then kind of behind this picture is those mountains that I mentioned. Here's the Oregon Mountains that You can see here, we're going to end up resealing the parking lot is one of the small things that we'll do, but you can kind of see the opportunity that's currently in place and then what we're going to do to the overall project to help improve the experience for the tenants. Interior wise, I think this is our biggest opportunity. Is really most of the units, if not almost all of the units, are classic from a kitchen and bathroom standpoint. Some of the bathrooms and a few of the floors do have, new vinyl plank, but all original tubs. Again, only one of the units has this newer vanity, but just about every other unit looks like this. So an opportunity, we're going to slowly come through and improve those, but we're going to do all the basics things first to make sure we can get the rent up to current market standards and then continue to improve that. And so we can command a better rental rate. So very excited about that opportunity. Here's a good mix of the units. So I mentioned 1, 2, and 3. Majority or half are 1 bedrooms, and you can see the breakdown between 2 and 3s, but pretty large relative to the other units that are in the market. And again, this is where we're really excited for you math nerds. $595 is the current rent for a 1 bedroom, and the market for a comparable, same age, same amenity type of product is considerably higher. So we have quite a bit of a delta between $130 difference in just the 1 bedrooms, and you can see the difference in 2s and 3s. So average unit size, definitely larger than most, and the rental rates per square foot or just by pure rental number is quite a bit higher. So we're going to focus on these 2 and 3 bedrooms and upgrade them as we need to, but then we're going to really focus on the rental increase on those. And then as we renovate some larger ones, we'll do some additional things, but LED lighting, water conservation is going to help operations as well as the experience for the tenants and just brighten the place up. So that's what that looks like for now. Let's look at a little bit of the investment details. This is our 10-year model, and you can see the cash flow based on a $100,000 investment, and it will ramp up here over the course of the holding period. So your total cash flow would be $99,851 on a 10-year hold. The equity at sale looks like this. Total combined is 180 plus your original capital back. And so that gives you a 2.8x, which is the slide that I had up front. So again, the same stats on a 10-year hold. On a 7-year model, it looks like this. And again, as we consolidate the debt and get that kind of locked in place, we'll figure out exactly the holding period. But again, we're modeling for a 7 to 10-year hold. The cost segregation study, for those of you that are unfamiliar with it, but there's an advantage to do something called bonus depreciation. We hire a company to come out and do an engineered study, and essentially up to about 80% of your initial investment could be recouped as a loss, and that can flow into your as an opportunity for some tax benefits. So look into that, check with your tax advisor, CPA, but a very good opportunity to potentially have some tax savings. Capital stack, pretty straightforward. It's a 7% preferred return on your cash flow, and then a 70-30 split thereafter. So simply said, anything that's left over after the limited partner or the passive investor gets their 7%, gets split 70% to you, the investor, 30% to us, the general partners. And so that's what that equity stack looks like. This is the debt that we're going to secure from a loan standpoint. And upon sale, same thing, 70-30. So it's a very simple equity structure. A little bit about the P&L here. So might have to squint to see this, but focus on this category right here, this line item. So it's the effective rent. We're being pretty conservative with our rent growth. We're going to spread that $110 growth out over the course of 24 months. We believe we can capture a lot more of that in year 1, but we're budgeting or underwriting to a little bit longer term. Just gives us a little bit more cushion to make sure we can still hit the returns at the end. But of course, anything can happen, but we feel like we've budgeted enough of an economic vacancy total, but then also just had some room in between to focus on that ramp up growth. We're implementing the RUBS, which is a utility reimbursement program that comes out really in year 2. And then additional income, I'm not factoring in additional laundry income. We're just keeping as it is. That will be an additional bonus. So again, one more level of underwriting opportunity. Taxes are set in place. There will be an assessment where we're looking to adjust that right now. So we've underwritten it as a standard 3%. And then you'll see here that there's quite a bit of a spike in payroll. Currently, the property does not have anyone on site, but this includes a part-time and a part-time leasing agent and a part-time repair tech that will be on site at the property or be able to be available for the property. And then that cost will be dissipated as we get some other properties online. The capital allocation. So this is the term that we're working through right now. Eric is working hard on that to make sure that gets right. And we feel like we have a pretty good interest rate locked up. We will have locked up. This is the breakdown of the equity and capital sources. So 4.914 million is the total capital required. Purchase price, capital expenditures, that will be, I'll review that here in a little bit with the budget that we have as far as the repairs that we're going to make. The lender reserves. So this is because of COVID, there's a reserve requirement to make sure you have enough principal, interest, taxes, and insurance for 1 year that's reserved in an account. We'll be able to get some of that back towards the end of the second year. And then our acquisition fee, closing costs, 4.9414 million. This is a sensitivity analysis. So this is an important piece as, again, we try to hedge and make sure we're conservative in our underwriting. So today, based on the revenue projections that we have, we feel that the property can go down in occupancy to 63%. So a lot has to happen to get occupancy down to 63%. If that does, that's our break-even point. So that's one way we look at it from an operation standpoint. And then from an exit standpoint, we have a cap rate of 6.7. If you recall earlier, we're at 5.75, 5.8. So we baked in about 10 basis points per year of holding period to get to that 6-7 exit. And so that gives us a pretty good thing, but you can see the differences. If cap rates continue to compress, we'll be in a better position. If they expand, you can see the returns there. Business plan overall, our biggest play here is CALCAP Properties. They're our property management partner on this particular opportunity, and they are very well versed in the marketplace. They're already well established in New Mexico and Albuquerque, Dallas, and of course here in Phoenix. They are expanding into Las Cruces, and so this will be a great opportunity for us to partner with them. You can see some of the things that we're going to be able to do. I mentioned being able to capture some additional rent revenue immediately without significant renovations, and then implementing RUBS, managed parking, and some additional locker storage that we're looking at. We are looking to rebrand the property, and so this is some tentative renderings of what we believe the name and the look could be, so kind of a modern look. And here's the breakdown in CapEx. So I mentioned resealing the parking lot, the pet park, upgrades to a laundry room, and some minimal upgrades to the interiors. A little bit about CALCAP. They've been around since 2008, and they manage over 3,500 units across the Southwest. So again, a very good partner. We really aligned with their core values and the way they focus on their people, because this is a people business. Managing properties is running a business, but that only happens with the people that are on the ground and the managers that oversee them. So we really feel strongly with the way they operate, and that helps us become better managers of your investment. Again, you guys can review some of that. A little bit more about market comps. So we took actual other comps in the area. I physically call them, my partners physically call them, got the rates. We're going to be touring them next week just to make sure we are truly comparing apples to apples, but all the actual rates that we got. And when we compare them to our property, you can still see the huge difference in the rents so far below market. Again, we compared 2- and 3-star properties of the same vintage. So this is not comparing a 2020 product or even a few years old Class A. These are all Class B, Class C, or you could say 2- and 3-star properties. And we are far below market. So that's a good thing for us. We can get that up to market with some light improvements. Again, I'm a numbers and charts guy. So when I see what is the opportunity, the upside in the marketplace, you can see rent comp growth just in your Q1 of 2021, and even 2020 through the pandemic, they still saw 2.5% to 3% rent growth. And so that gives us really good upside of what is coming. And that speaks to the migration patterns of folks wanting to move down towards the Southwest. New Mexico is a very great place to live. Very good weather overall, but again, good opportunity from an economic standpoint. And you can see the relation there too in vacancy rates as they've dropped significantly down under 3% just in the last quarter. I won't go through these, but here's some of the actual market comps that we shared, and you can see some of the rates that are there. A little bit about Las Cruces. Again, for those of you that aren't familiar with the market, overall, it's the second largest city in New Mexico, Albuquerque being number 1. Population is about 100,000 in Las Cruces proper. but Donna Ana County is the county, and a lot of folks just live right outside the city limits there. So it's about 300,000 people within the county, and they all kind of come into Las Cruces for employment. Largest employer is definitely New Mexico State University. There's also a military school there. White Sands Missile Base is kind of feeds out of that university. White Sands, for those of you that don't know, is kind of the largest military installation in North America. All branches of the military have some, outside the Navy, have some sort of operations there. New Mexico Tech, a good tech school. Donna Ana County is also one of the larger employers, and you have Memorial Medical Center and a few other medical centers that are have a very good presence with folks working in there. So feel like there's a good balance of high-end employers, good solid employers, reliable employers that can help balance any kind of economic up and down that we see. In addition to 350 plus days of sunshine, so great weather is always a good thing. Top rated schools right by our particular property. So again, it's in a very good area. As the location map, you can kind of get an idea here. So you can see I-25 runs north and south. I-10 runs east and west here. And so it's kind of at the crossroads of those two, is where New Mexico State is here with the Aggies logo. And then our property is to the right, north and to the right there. And so again, it sits up on a hill, view of those Oregon mountains, and then the city views down this way. Sprouts, Starbucks, all good signs of a different demographic, say a higher demographic in the area of trying to make sure they could meet that need. And White Sands Missile Base is out towards that way, and Albuquerque is a couple hundred miles north. So we feel like, again, a very good location, and we've actually identified a few other properties that are going to be just near there as well. We're going to add to our portfolio and really set that branding presence for us in Las Cruces. Just one more piece of data, demographic-wise, median income, $59,000 for this neighborhood. And so that's actually better than the national average and much better than Las Cruces in general. Las Cruces overall is about $40,000. So we feel like we have a really good area that we're focused on, highly educated tenant base potential. I mentioned the employment industries earlier, but here's a quick visual to kind of give you a breakdown of what type of workers or what type of industries are out there. And then a lifestyle rating is just another way to look at the same kind of data of who is really looking to live in this kind of area. So this is a good breakdown. We like to see a good balance. Anything above 60 is a very good kind of number. This is the next steps. So if you have any more information or you're looking for more information, this is a good place to start. So I mentioned the minimum investment. As far as types of investments, cash, self-directed IRAs, 1031s are all considered. We're taking some of those on a case-by-case basis, so please reach out to us. And we will have a live webinar on the 24th of February. There's a link below. Funding timeline, ideally, if everything goes right, we will be looking to close April 10th. And so we're looking to have all funds received by March 22nd. Thank you for checking out this video. Again, please reach out to us. You should have this PDF, and there's a link to the portal so you can place your commitment there. And again, our information is right here. Please reach out to us if you have any questions. Thanks.